Good morning, everyone. Today is September 28th, and I thought I'd give you a little look at the behind-the-scenes work that goes on to turn all of these systems into incredible solutions. First off, as I mentioned to you, it's almost impossible for an average Joe to create a decent trading system. I mean, the amount of work and effort and focus that goes on in trying to find something that is consistent and makes money over any market trend is really, really difficult. It's almost impossible. As I tell people, if it was easy, they'd be on sale at Walmart for $5 and everybody would have one. And that's why when you look at all of these different systems that are out there, all of these different strategies, and everybody trying to sell you things, you need to understand that this is one of the toughest things in the world to try to do. Discretionarily, using your own resources, you can possibly do quite well for periods of time, but it takes refining your own skill. Turning it into a computer-based trading system to be able to consistently trade means you have to have very solid rules and regulations in place, and you need to really understand the mechanics of what's going on to be able to preserve and grow your capital. So one of the tools that I've been working with, I've highlighted this before, is the TTScanner. The TTScanner is a core solution that I've built over the last 4 or 5 years that has really promising outcomes. So we use it for the TTScanner hot lists on the Mint.com website. I use it for other sources as well. This is an intraday version of the TTScanner hot list. Now this is the MES chart. What I'll do is I'll go to the MNQ, which is what I'm really focusing on, MNQ and MYM, as well as Bitcoin. I will change it back to 10 minutes, which is where I'm focusing. And what we'll do is we'll take a look here, and we will, as it loads, this is 4,500 days of data. You can see this shows you historically what it's been doing. But the work that goes on behind the scenes is right here in the code. This is the code that I've been writing, over almost 5,000 lines of code. It goes through and does all kinds of stuff with Donchians and drawing features, cancel orders, handling orders. This is designed to auto trade. But this is what I build. This is what I do for you. Ultimately for you and I, let's put it that way, because I plan on using these as well. And what we're going to do here, ladies and gentlemen, is I'm going to show you right here a 4,500-day backtest on a 10-minute chart for the TTScanner. Let me move this up here and take a look at this graph. This is first we'll go to detailed equity curve. This is the detailed equity curve showing you historically what's happened since roughly early August all the way through September. Now remember, we've had a variety of different trends take place throughout this time frame. So if I were to come back over here and try to highlight the day, so this is the NQ, come back over here, oops. Come here, go to daily, and go to MNQ, pound F. So understand that what we're looking at as far as the timeline for this back test is we are looking at from August to September, which is basically early August, back over here, all the way through here, this entire timeline. So we've got up and down activity taking place in this back test from early August till now, and you can see through the back test what the results look like. They're fairly consistent with very nominal drawdown. When we look at drawdown intraday, drawdown is averaging now you can look at max drawdown, yeah, about $500. But the way I look at drawdown is I start looking at average drawdown periods where we start to see a threshold, and I'd say it's about $350 to $400. This is trading 3 contracts in 2 targets and 1 trailer. Now you can see we're up near new equity highs right now. What's most important about this is the strategy results. 77% accuracy with a $127 average win and a $96 average loss. So now think about it like this. That's basically that out of every 4 trades, 3 of them are going to produce about $127 each, and 1 of them is going to produce a minus $96 result. So that's going to give you about $375 minus 96, so about if I do the math right, $285 on average every 4 trades, net profit after commissions and slippage. The idea is if I can get this win-to-loss ratio as a 2-to-1 ratio or higher, then I'm going to see incredible results. And I'm getting there. But the idea of 76, 78% accuracy with what's here is a 1.4, 1.35 to 1 ratio roughly, a little lower, maybe 1.3 to 1 ratio, actually be a little higher than that, 1.33 roughly to 1 ratio, then you can see we're doing pretty good. Largest losing trade, $375. Largest winning trade, $1,000. The strategy results are fantastic. It made 10 grand over the last 2 months, lost 2 grand in gross losses, netted almost $8,000 over the last 2 months, trading 3 E-micros. It only took 104 trades. So it's not like it's over trading. This is intraday on a 10-minute chart. That's quite impressive. And when you look at the periodic data, you'll see lots of positive numbers. Negative numbers are in red. So there's a couple of losing days there. Historically, you can see August, September averaged about 3 grand. Now, this is not through all of August or not through all of September yet, although we're close. So it's averaging about 4 grand each. And again, the data, let's see if we can go to the max favorable. There's this one chart here. So max adverse excursion. This shows you where our losers were. So the greens are all winners, the reds are losers, and you can see here that the right side, I believe, is the drawdown in dollars. So maximum drawdown was $285, $290. Had a lot of trades over in this area, in the drawdown area, whereas the profitable trades got a ton of trades in $100 range. Got a couple up in the $150, $200 range. That we had these here up in this positive area, $250 and $550. So it's actually, let's see, run up PL. So this gives you an example of how it performed. You obviously want to see more green, but what you want to typically do is you want to typically see the green area here in, and the way I look at it is about an average. So here we have a lot of volatility. Here we probably had a Fed day. But if you take a look at this, the average green is in the 150 to 200 range. The average red is in the minus 65, minus 55 range, if that. So essentially, you're looking at a higher number of consistent days with an average of $150 to $200 in profit days, and a very low number of losing days in the average of, say, 55, 65 range. And that's at a 75% win rate. So it's a 3-to-1 winning days versus losing days. Quite impressive overall. So let's go back here to the close-to-close ratio. Now, if we take that same system, no changes, didn't alter it at all, apply it to the YM, the mini YM, it's produced $16,000 in profit, and $39,000 in gross profit, $23,000 in losses. You can see the equity curve looks a bit different. It's got some variances. Let's see the drawdown. Drawdown is about $1,000 max drawdown. Average drawdown, as we're getting over here with more data, probably be about $450, $550 as the average strategy drawdown. It was much calmer back over here and got a little more volatile back over here. Let's take a look at the number of trades. 114 trades, 60% ratio. Now this is a 1.5 to 1 ratio roughly, 1.4 to 1 ratio between the average winner and the average loser here. And what we're looking at is, again, do the math, and the way I explain it to people is very simple. On a roughly a 60% accuracy, that means I'm going to win 6 trades out of every 4, and the 6 winners will generate about $610 each. That'll be about $6,000, $6,100, and the 4 losers will produce about $2,000 in losses. So I'm going to get $6,000 roughly in profits for every $2,000 I take in losses, and that's going to happen essentially every 10 trades, consistently, the way the system runs. So again, the theory behind this is that to eliminate as much risk as possible. Now, this trade so far has got 1 trade. It might have been forced out. Let me check, because we might still be in it when I ran the test. Nope, we did get stopped out of it here. Oops, nope, gotta go here. LX stop. Yeah, we did get stopped out of that. So that's a new loser. 2 trades. So there's our new equity loss right now, drawdown, about $2,200. But the YM's a bit more volatile. You know, you can see 500, 600, 700 point swings in the YM. But still, what I want you to focus on is the consistency. Come back over here with the detailed equity curve and understand that that $2,000 loss is represented right here. So if we go back over here to drawdown, there's going to be, and this is obviously a little off the dollar percentages, but that's going to be our drawdown right here in the capability of the system. So it's producing very, very well, but it has had a bit of a drawdown recently. Max strategy drawdown, $5,000. So it's telling us right there that we have a bit more volatility with this system. But remember, this system is capable of producing, ladies and gentlemen, it is capable of producing $8,000 a month fairly consistently. Now, I'm going to run longer tests, but I just want to show you. Now, what is the benefit of this? What am I trying to show you? I'm trying to show you that if you're building a system or you're trying to grow a system, this is the Russell 2000. Russell 2000 trades a little differently. But anyway, focus on failure. When your system does well, focus on how you can squeeze every penny you can out of the successes without disrupting the trade system overall. That's a very tricky thing to do. But when your system is failing, I need you to understand you must focus on failure. You are designing a strategy or a trading system around the idea that it's going to be consistent and it's going to provide you opportunity. If you find that it's not consistent and not providing opportunity at certain times or under certain conditions or whatever, you need to really focus on when it fails. You want to see a nice solid equity curve with very little drawdown. And this is what the ultimate goal is, to be able to create something. Let me check this and make sure that I've got it typed in right. I believe I do. $5 a point on the M2K. And again, the M2K produced $1,900 over a 2-month process, I believe. Yep. So it's not producing huge numbers, but the consistency of something like this is very solid. In other words, you could double or triple this because the drawdown factor is very, very small. Literally, if we take a look at the trades, trade analysis, max drawdown, largest losing trade is $138. Max strategy drawdown is $429. Those are consecutive trades. We have a 70% win-loss ratio, and our win-loss ratio is about 1.4 to 1. So that means, again, that basically every 7 trades are winning me $50, and then I've got 3 trades that are losing me 37. So technically, I got 7 trades making me $350, and I've got 3 trades losing about $110. So you guys can figure that out. It's 350 minus 110 is 250, as long as every 10 trades, as long as I keep letting the system run. Lastly, I think we're going to come over here to the MES. MES is a different beast. MES is a very difficult beast to trade. It tends to be a bit more volatile. It tends to have a bit more drawdown, and you can get into these flat periods where it just rolls around. This is the longer test that I ran by moving to a 20-minute chart instead of a 10-minute chart. Ideally, the strategy is performing at 65.7%. It's got a 1.1 to 1 ratio. So again, this is getting kind of flat if you think about it, even though it's 65% and the drawdowns are, it's showing $200, but in reality, it's a $2,900 drawdown trading the way it is. And that's because of the way this system works to show the drawdowns. It's still making $3,000 profit, but I can tune this up quite a bit more to get it to produce better. But ideally, what I want you to see here is, like I said, the consistency is, 63, 70, 61, 60. It's made $1,600, $1,600. So now this is on the E-micro. Okay, if we were to move this to the, these are the micros. If I were to move this to the minis, this would be 16,000. This would be 12,000. This would be 7,000. And of course, this is just a partial month here, so we can't really rely on that. And if we take a look at the graph and take a look again at the trade graphs with the adverse excursions, you can see that we're in the profit and loss range. Let me make sure this is set up right, because I'm not sure. Yep, it looks set up correctly. Maybe it's just not drawing it correctly. But you can see here that the average winners are in the 40 to 50 range. Let me go to run-up P&L. So this gives you an example here. Run-up P&L, remember, we've got about 60% average winning bars versus 40% losing bars. But the average winning bars are in average right around 55, and the average losing bars are around 25. So that's almost a 2 to 1 type of ratio, run up to drawdown type of ratio, which is why this graph here is holding up as well as it is. It's basically got a 2 to 1 run up to drawdown ratio, meaning that we're seeing the profitable trades on average with the 61 or 62% accuracy ratio and the 1.3, 1.2 to 1 profit to loss ratio. What happens is the metrics are playing out at about a 1.7, 1.8 to 1 ratio overall, winner to loser over a long-term scenario. Now, is this the golden goose? I mean, the ES system, I would probably say, is consistent enough to consider putting some money in and watching. Ideally, what you want is avoid the dreaded drawdown period where you watch the equity curve run up and then roll down ugly, which wipes out all of your equity. Because if you start with, say, 10 contracts here, roll up to 30 contracts here, and then it starts taking huge losses, you do not want to be a part of something like that. You want something that's consistent, very moderate drawdown, very low risk levels. And then that way, as you're incrementing up to trade more and more contracts, you have some consistency in knowing that you're not going to potentially have that big, ugly drawdown factor. And again, some of these others, this is the NQ, some of these others produce fairly solid results. You see that the NQ had this flat period. This is going to be from early September to mid-September. Which is where we're at, and then it started trading out of this mode. Withstanding this sideways activity is better than withstanding a drawdown, because you could alternatively be trading something else. You could trade, hypothetically, something over here where we have the M2K, and understand that over that same time frame, early September here, from here to here, you could be trading this and having some profitability, or by trading the MYM, which is somewhere over here, and have some profitability. MES, MYM. So in theory, You could be trading from the mid-September, early September area here, all the way across to here, and have an additional $2,000-3,000 profit with this system over here. But again, it is a process of focusing on failure, focusing on, let me come back over to the chart, focusing on the real opportunity that you have in the system. The real opportunity you have with any system is in allowing it to do what you designed it to do. Hopefully profit from the trade setups that occur based on how you've built your strategy. Now, if you see massive drawdowns take place, what you want to remember is that you need to focus on failure. You need to focus on containing risk, containing your exposure, filtering potentially out those bad trades, finding out why your system is failing. And that's why I tell everyone, when you're building a strategy or trying to deploy a strategy, you must focus on the failure that's taking place in the strategy and learn how to contain it. All right, guys, I hope you enjoyed. Remember, this is an ongoing process. This is what I do behind the scenes, day in and day out for everyone. I try to refine and improve and develop new technology for everyone to use to grow, manage, and protect your wealth. Follow me on Twitter, follow me on YouTube, join at ment.com. It's free. Take advantage of everything that I'm offering you. Remember, we've got huge opportunity right now with these live trades. These things are performing very, very well. Let's take a look. So of our core triggers here, IYR is just 3 days ago at 3.75%, already taken its first profit target. OIH is at 9.16%. It's only 6 days old. It's already hit the first profit target. TAN is only about 4 days old. It's holding up flat with no real action. XLE is already up 7.41%. It's about 6, 7, 8 days old. XLU is about 6 days old, 3% profit, already took its profit target, very close, about $1 away from getting stopped out. XOP is at 10% profit, already taken a profit target, still quite a ways from getting stopped out. I mean, these things, they're just sitting there for you. All you got to do is go to ment.com, log into the account, create your account, then log in, then click on Live Trades End of Day right here. Then go to Live Trades End of Day right here. And here you go. Now start looking around for triggers. A Reddit list, Pure Alpha, that's what I've been doing. DE is 4 days old and somewhat flat. DTE is about 7 days old, 3% profit, already took half of the profit target. FDX is 8% profit. It's only about a week and a half old. RC is 11% profit, only about 7 days old. Already took profit target 1170. I mean, it's pretty simple to look at these numbers and say, you know, you could start with a $500 or $1,000 or $2,000 position in any of these, and you could be making hypothetically $100 to $500 a month. Roughly 10% on that money just following these pure alpha trades. I mean, they're everywhere. And when you start moving to 2x, you start getting bigger moves. So DIG is 2 days old. It's minus 7%. This could end up being a loser. We'll see. URE is 1 day old, minus 3.32. UWM is 2 days old, minus 6%. Still hasn't gotten stopped out. Still hasn't exited. XPP is 11%. It's already hit its first profit target. Now, just so you know, ladies and gentlemen, the early trades, when you get into a trade, it's only 1 or 2 or 3 days old. That's normally where you have the greatest risk factor for a trade. So you want to pay attention to them. You want to pay attention to them when they're 1, 2, 3, 4 days old and they're brand new, because that's where you have the biggest risk. 2x bearish trades. Pure Alpha, BIS is 4 days old, minus 6%. DRIP is 8 days old, 15%, already hit a profit target. DRV is 19%, it's only 6 days old, already hit a profit target. DUG is minus 7%, no profit target yet. It's only 2 days old. ERY is 10%, already hit a profit target. It's about 5 days old. FNGD is minus 6.24%. It's just yesterday, today's trigger. It's a brand new trigger. Cold, KOLD, is about 5 days old. It's plus 6.7%, no target yet. QID is minus 2.28%. Trigger was yesterday, so this is 1 day old. RXD, trigger was yesterday, minus 1.72%. SDAL, trigger was yesterday, was minus 4.2%. SDP was triggered about 8 days ago, 6 days ago, 5.82%. SRS was triggered about 8 days ago, 13% profit, already hit a profit target. SRTY was triggered 2 days ago, minus 9%. TMW was triggered 2 days ago, minus 6%. Again, that's where you have your initial risk, but still it is above the protection level. What you want to pay attention to is, where did we get in? Where do we have our protection level? Where do we have our hard stop? And if we're still holding it. We are holding this, and this does rank well, so we'll see how this plays out. TZA is minus 9%. Just traded, trade trigger was 2 days ago. All right, guys. Good luck with everything. Hope you enjoy these videos, and I'll keep you updated. New things are coming for Mint.com. When we get to the point where I can go ahead and release this to the public, I'm confident enough and I can get it auto trading for you, which it's actually auto trading right now. But when I'm confident enough to release it, this is going to maybe change the world for some of you. Imagine having something that produces 60, 70, 80% accuracy at a 1.5 to 1 ratio. You start looking at some very interesting equity curves, trading a very minor amount. You could be producing 3 to 5 grand a month, just letting the system run for the rest of your life, theoretically. All right, talk to you soon.